Stellantis, the company behind major car brands like Jeep, Dodge, and Chrysler, is facing some tough times. The company is undergoing big leadership changes, shifting its focus toward electric vehicles and trying to keep up with the fast-changing market. But things aren't looking great. Its dealer networks are struggling, sales are falling, and internal issues are rising. Stellantis is at a crossroads, and the decisions it makes now could have a major impact on the future of American cars. Stick with us until the end to see how the company's response will shape the car industry. And don't forget to subscribe to our channel for more updates on stories like this. Let's start it. Stellantis, the global auto giant behind iconic American brands like Jeep, Dodge, Chrysler, and Ram, is grappling with a severe crisis. Once a leader in the automotive industry, its performance has sharply declined over recent years. Sales have dropped significantly in the US, with Jeep experiencing a 44% decrease since 2018, and Dodge facing an even steeper 67% drop from its peak in 2013. Chrysler is also struggling, and loyal customers are increasingly turning away from the brand. Dealers are overwhelmed with unsold inventory, including outdated models that no longer capture the public's interest. Insiders are raising alarms about Stellantis' future, warning that the company could lose its position in key markets if it doesn't make drastic changes soon. If they don't pivot quickly, they could be forced to retreat from important markets, one anonymous source noted. The crisis at Stellantis highlights the growing challenges faced by traditional automakers in an increasingly competitive and electrified market. With consumer preferences shifting and electric vehicle demand growing, Stellantis' ability to adapt will be crucial to its survival. The company must act swiftly to reinvent its brands or risk losing its place among the industry's leaders. The significant drop in sales for Stellantis highlights serious issues with both its products and strategy. Iconic American brands like Jeep, Dodge, and Chrysler, which once symbolized ruggedness and innovation, are struggling to stay relevant. Jeep, traditionally known for its off-roading legacy, has lost its appeal, particularly among loyal fans who appreciated its tough, adventurous spirit. Dodge, once a leader in muscle cars, now faces criticism for shifting its focus to quieter, more fuel-efficient models, diluting its brand identity. Similarly, Chrysler, once associated with luxury and comfort, is seeing its lineup fail to attract younger buyers. As these once dominant brands continue to see declining sales, Stellantis is at a critical juncture. Without a major overhaul of its offerings and strategy, the future of these historic American brands remains uncertain. The company must act quickly to address shifting consumer demands and heightened competition or risk fading into obscurity. Stellantis' inventory woes are reaching a boiling point. The company ramped up production during the pandemic in anticipation of continued strong demand, but that demand did not materialize in the way it was expected. Now, Stellantis is left with a backlog of 1.4 million unsold vehicles. These cars and trucks are sitting at dealerships across the country, many of which are older models that consumers are simply not interested in anymore. While competitors like Ford and Toyota are releasing fresh, new models that appeal to today's buyers, Stellantis is struggling with an aging inventory. Dealerships, which once thrived on a steady supply of vehicles to sell, are now overwhelmed with unsold stock that they cannot move. This glut of unsold vehicles is not just a logistical problem, it's a financial crisis. With dealers left with limited options and no clear plan from Stellantis on how to address the inventory problem, the situation is only growing worse. Some dealers have expressed their frustration, saying that they feel unsupported by the company, leading to growing concerns about the brand's ability to stay competitive in the US market. To combat falling sales, Stellantis raised the prices of its vehicles, hoping to offset financial losses. However, this decision has not yielded the expected results. As the cost of living rises and inflation continues to pressure consumers, Stellantis' vehicles are being viewed as less affordable. The price hikes have turned away many loyal customers who once favored brands like Dodge and Jeep. Instead, buyers are increasingly turning to more reasonably priced alternatives from competitors such as Ford and Toyota. Dealers have noticed the shift, with one Dodge dealer stating, "When customers see the price tags, they walk out." This growing frustration is evident among Dodge and Jeep fans, who now feel that the brands no longer offer the value they once did. The attempt to maintain profit margins by increasing prices has backfired, eroding the customer base Stellantis relied on for its success. As the brand's loyal following shrinks, competitors are seizing the opportunity to capture market share. Stellantis' strategy to raise prices may have been aimed at protecting profitability, but it risks damaging the foundation of its customer loyalty, leaving the company vulnerable to further losses and a shrinking position in key markets. At the center of Stellantis' ongoing crisis is CEO Carlos Tavares, whose leadership is coming under increasing scrutiny. Tavares, who has led the company since its creation in 2021, is facing growing criticism for focusing on short-term profits rather than the long-term health of the company's brands. This has led to tensions between Stellantis and its dealer network, with the Stellantis National Dealer Council recently sending a letter to Tavares expressing their dissatisfaction with the company's direction. The letter emphasizes concerns that Stellantis' focus on cutting costs and maximizing profits has been detrimental to dealer support and customer satisfaction. Dealers feel that the company is becoming disconnected from the needs of its retail network, and many are frustrated by the lack of communication and support from the leadership. Sources within the company suggest that Tavares is not paying enough attention to the concerns of those on the front lines of sales, further deepening the rift between the company and its dealers. This growing tension has led some industry experts to predict that Tavares may be forced to step down if the situation does not improve. His leadership is now seen as a key factor in whether Stellantis can recover or continue to struggle in an increasingly competitive market. One of the most significant issues Stellantis faces is the erosion of brand loyalty. Brands like Jeep, Dodge, and Chrysler were once known for their distinctive American appeal, creating a deep emotional connection with their customers. However, Stellantis' recent moves, such as price increases, redesigns, and a shift toward more luxurious models, are driving away longtime fans. Jeep in particular has shifted its focus toward the high-end market, producing models that appeal to consumers seeking luxury, rather than those who prize the brand's rugged off-road capabilities. This change has led to a backlash among traditional Jeep enthusiasts, many of whom feel that the brand has lost its identity. Similarly, Dodge has faced criticism for moving away from its iconic muscle car image by introducing quieter, more efficient engines. Fans of the brand, who have always associated Dodge with powerful, throaty engines, are unhappy with this shift. As Stellantis pushes profitability over tradition, it risks losing the loyal customer base that once made these brands iconic. If the company doesn't address these concerns, it may find itself in the unfortunate position of losing not just sales, but the very essence of what made its brands great. Stellantis' relationship with its dealer network has reached a breaking point. The National Dealer Council has openly criticized the company for its lack of support, particularly in terms of inventory management and incentives. Dealers have voiced their frustration, citing poor sales of outdated models, rising operational costs, and a lack of support from Stellantis' corporate offices. One dealer commented, "Stellantis is setting us up to fail." This frustration has created a toxic environment for dealerships, which are struggling to stay afloat without the necessary resources to compete with other brands. Many dealers feel abandoned by the company, and some are even considering switching allegiances to other automakers. As competitors offer more attractive incentives and better customer support, Stellantis' dealer network is left in a precarious position. If Stellantis doesn't take immediate action to address these concerns, it risks losing valuable relationships with its dealers, which could spell disaster for the company's future. Stellantis' attempts to modernize its fleet have met with mixed reactions, particularly when it comes to key models like the Ram and Jeep. The decision to replace the iconic V8 engine with the Hurricane twin-turbo inline-six engine in certain models has been met with strong resistance from longtime customers who associate the V8 with the raw power and distinctive sound of Dodge and Ram vehicles. While the new engine offers better fuel efficiency, it has not been well received by the brand's traditional fans. Some Dodge and Ram enthusiasts have expressed disappointment, saying that the new engine lacks the power and performance they loved in the older models. Similarly, Jeep is facing backlash for the high price tags attached to its latest models, including the 2024 Jeep Wrangler Rubicon, which can cost upwards of $85,000. Fans of the brand are concerned that Jeep is abandoning its rugged off-road routes in favor of a more luxury-oriented approach, which makes it difficult to justify the high price point. These strategic changes, while designed to appeal to a broader market, are alienating the loyal fans who have been the foundation of Jeep and Dodge's success. Stellantis is at a critical crossroads as it faces a series of challenges, including declining sales, dealer dissatisfaction, and fading brand loyalty. As competition intensifies and financial pressure builds, the company must make significant changes to secure its future. If Stellantis can focus on meeting customer needs and improving dealer relations, it may have a chance to recover and regain its position in the market. However, continuing down its current path could lead to further alienation of its core audience and a loss of market share. The next few years will be pivotal in determining whether Stellantis can overcome these obstacles and reclaim its former success, or if it will fade from the automotive scene. The road ahead is uncertain, but bold decisions now could help Stellantis navigate this challenging period. The future of the company in North America and globally will depend on the choices made in the near term. Today's wrap-up on our video brings us to the crossroads Stellantis is facing. With major challenges ahead, including shifts toward electric vehicles, sales struggles, and internal issues, the decisions made in the coming months will be crucial for the future of the company and the car industry. Will Stellantis overcome the crisis or face further setbacks? We'll be watching closely as this story develops. Don't forget to subscribe to our channel for more updates on this and other important automotive news.